Good morning, my name is Richard Perry and this is the ETX Capital Morning Market Bite. A sell-off in global sovereign bonds pushed Asian shares to a two-week low on Wednesday as investors worried it might trigger profit taking in other asset class, while the US dollar stayed on the back foot due to worse than expected trade deficit numbers. The MSCI's index of Asia Pacific shares outside of Japan fell 0.8%, while Australian stocks fell 2.3%. Bonds have been amongst the best performing asset classes in recent years due to the unconventional monetary policy taken by global central banks. However, signs are emerging that investors are no longer keen to chase ever-shrinking yields, adding to the pressure of global equities. The recent sell-off in German bonds, US Treasuries and UK gilts has led worries about Eurozone monetary conditions and possibly a volatile unwinding of the short Euro trade. In addition, with Greek's debt talks with its creditors adding to the negative sentiment in the bloc. In just 4 sessions, the 10-year German Bund paper had tripled to 0.51% and erased all gains made this year. On Tuesday alone, Italian, Spanish and Portuguese yields all rose between 27 and 30 basis points. Over in the States, the US 10-year Treasury reached a 2-month high at 2.20%, having risen from 1.92% from less than a week before. In the currency markets, the dollar was less likely. An unexpected sharp widening in the US trade gap suggested that the economy may have shrunk in the first quarter. The dollar index, which is a measure of the dollar against a basket of currencies, fell as far as 94.877, retreating from a one-week high of 95.946. Against the yen, the greenback eased to 119.94 from a 3.5-week high of 120.51. In addition, the euro rebounded to 1.11214 from Tuesday's lows of 1.1066, following the potential unwind of the broader short euro trade, spurred by the rise in the EU sovereign bond yields. Later in the day, Federal Chair Janet Yellen is scheduled to speak, and the markets will be super sensitive on any guidance for the outlook for the first interest rate hike. Over in the commodity markets, the broad bounce in commodities saw oil and copper prices rise to the highest peak so far of this year, with Brent crude almost up 50% from its January trough to reach 68.28 a barrel, with the US crude WTI not far behind at 61.41. Over in the UK equity markets today, Sainsbury's reports its first annual underlying profit fall in more than a decade, caused by an industry-wide price war. Sainsbury's is now trading down 0.67% to 273.62. Imperial Tobacco also reported a 5% decline in underlying tobacco sales volume in the first half of its fiscal year, but remains firm against the outlook, and its shares are trading at up 2.44% at 31.99.6. The FTSE 100 is currently sitting at 69.10, up 4 points, and today's data points are EU-wide services PMI along with the US ADP report. Thank you.